Good morning, good afternoon, and good day to you. My name is Carter Froelich, and I'm the founding member of the Property Ledger, the web-based real estate investment software for individual real estate investors. I'd like to thank Arpola for giving us the opportunity to be a service to the real estate community by presenting a number of educational videos related to financial analysis of real estate investments. The first of these that we'll be presenting is that of financial literacy and why it's important, and to the extent that the investor doesn't have this financial literacy, that they should beware. Before we get into that, let me tell you a little bit about myself. I'm a certified public accountant, licensed in the states of California and Arizona. Please don't hold that against me. We're going to try to make this fun. I'm also a former state certified real estate appraiser. I don't do that anymore, but I did. I'm currently the partner in a national real estate consulting firm. But first and foremost, I'm a real estate investor. And I've fallen in love with real estate investing ever since I was a kid, and I played my first game of Monopoly. I've been buying property since the 90s. I don't have a very sophisticated philosophy as it relates to buying property. I just buy it and hold on for the long term. And but let's jump into our topic, and that being financial literacy and why it's so important. What I'd like to show you first is a vendor pro forma that was presented in a website by a vendor who's selling real estate investments to investors, and this is on the East Coast. And this individual was selling a single-family home for $75,900. They're showing closing costs of $900, repairs of $12,000 for a total investment of $88,800. They had indicated that the income to be generated to the investor would be $12,900. Their operating expenses of property taxes, insurance, and a management fee for a net operating income of $96.41 or $9,641. That equates to a cash-on-cash return of 10.86%, which is really pretty good. For those of you who may not be familiar with cash-on-cash return, think of it in terms of a CD in a bank. If you were to take $10,000 and purchase a certificate of deposit, and at the end of the year, the bank wrote you a check for $600, that would be a 6% cash-on-cash return. And that was determined by dividing the $600 that you received by the $10,000 investment, thus a 6% cash-on-cash return. But if you look at this vendor pro forma, you might be a little suspect, because if you're educated in finance, and if you're educated in the nuance of real estate investing, you know that this vendor has left out some very important items. What are some of those items? Well, if you take a look at the bold items, you'll see that the investor left out the vacancy and credit allowance. Very rarely will you ever find, if at all, a real estate investment property that's not vacant at some point. So we need to make an allowance for the fact that at some point in time this will be vacant and won't be generating revenue. We're also going to have to pay some costs associated with that. We're going to have to pay a bookkeeper, or we're going to have to pay an accountant to do our tax returns. When that unit is vacant, we're going to have to go in and clean and repair it. During this time, we're going to have to pay for utilities. We're also going to have to remove snow or cut the grass and clean up the landscaping around the house or the unit. To the extent that we lease it, we're going to have to pay somebody a leasing commission. And then also, what we would have to do is start setting aside some money for those items that are going to wear out over time, such as appliances, roofs, HVAC, water heaters, etc. So if you go in and you revise the vendor's pro forma, you see that they're not generating the net income that the vendor was showing. We're generating something that's about 31% less than that, which in effect reduces our cash-on-cash return dramatically, or in this case by 31%. If we show the vendor scenario on the left-hand side, and we still wanted to generate that 10.86% return, given our new operating income, we could only afford to pay $48,250 for this property to still achieve the same 10.86%. So you're beginning to see why financial literacy and an understanding of of what it takes to operate a real estate investment is so important, because if you don't understand these things, you're going to be making some bad purchase decisions. So obviously the solution to that is to become educated in real estate investing. And clearly, real estate involves a lot of numbers, and you need to get up to speed on those numbers so that you can really evaluate the components of real estate return, which are cash flow, appreciation, the amortization or the pay down of the loan over time, plus all the tax benefits. And so we're really hoping that you'll continue with us on what we're calling the Property Ledger Academy to help assist you in your education over time. And to the extent that you're looking for an analytical tool, we really hope that you'll take a look at the Property Ledger. You can go to our website at thepropertyledger.com and take a look for yourself whether this will meet your investment goals. Thank you.